Hello everyone, this is the pre-market report video for today 29th December 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Just for info, today is the last trading day for this calendar year 2023. So like how in the last 2 days the trade volume was very low, similarly for today also we can expect the same. Anyway, first quickly let's see what happened yesterday in the US. Before their market opening, Department of Labor released the number of individuals who filed for unemployment insurance for the first time in US during the past week. As we know, always this data influences the US market since it's the early indication of US economy. Here, last night the data came as 2,18,000 number and it is higher compared to that of the last week and also higher compared with the market forecast. Now, higher claim numbers are paradoxically viewed as positive since it will put more pressure on Fed to cut the interest rate in the upcoming March 2024 FOMC meeting. This is the first positive. Second, we know Apple is the index heavyweight in all three major index. In that stock, before last night, the negativity was mainly caused by the Biden government's import and sales ban on iWatch due to the patent infringement. For that, Apple appealed to US court and the court issued the order to pause the ban. Hence, Apple resumed its iWatch selling, which in turn made the Apple stock positive and supported the US market on the positive side. However, that positivity was capped as 10-year bond yield increased to above 3.9% and Tesla stock dropped 3% on concerns about Tesla vehicle safety issue raised by 2 US senators, which Tesla recalled all its vehicle on China and fixed it under warranty, but in US, Tesla said all the failure was due to driver error, not the issue with warranty. So basically, positive info and negative info cancels each other and throughout the day, all three US major index traded near flat line with positive bias. If you see the S&P 500 days price movement, it's very volatile on the positive side, but actually it's not. The difference between the day's low and day's high is just 12 points. Dow Jones increased marginally by 0.14%, S&P 500 up by 0.11%, and whereas Nasdaq closed negative 0.03%. In case of US VIX, same as day before yesterday, around 12.5. So the takeaway from US market is economy started to slow a bit. For now, market considering this as positive, but in the long run, if it intensifies, then it will increase the recession fear or possible even will cause the mild recession. Regarding oil, as per EIA data, US Gulf Coast refiners were trying to clear all their inventories since the year-end storage will lead to the high tax. This and the improvement of oil shipment in Red Sea made it to drop around 3%. At the time of this video, Brent crude is trading around $77.5 per barrel and WTI crude is trading near $72 per barrel. Coming to Indian ADR, as it is, except Infosys, all others closed positive. If we calculate the arbitrage, then both Infosys and Wipro indicate the negativity of around 0.5 to 1%, whereas HDFC Bank reduced its arbitrage difference to positive 1%. ICICI Bank, it's flat, same value, direct correlation with Indian spot market. Whatever I said to US market is applicable here also. The trade volume is very low. Whoever is selling, they might just sold because of tax purpose. Moving on, regarding GIFT Nifty at 3 AM Indian Standard Time, for January month expiry, it closed at 21,955. By equating the yesterday closing, the premium is about 180 points. That's kind of huge. So, if we consider this 180 points premium, then it's indicating flat to negative opening. However, in normal first day after the monthly expiry, the premium usually between 130 to 150 points. If we consider those, then it's the indication of possible gap up of 30 to 50 points. So that is what happened last night in global market. Now coming to India related. I think most of us know yesterday Nifty had a very good day as it closed positive for the 5th consecutive day. However, I just like to highlight one thing so we can keep tab on everything. In the past times, we talked about this MSCI rebalancing, FTSE rebalancing, all those global rebalancing and its influence on Indian stock market. Similarly, yesterday it was NSE Nifty rebalancing, which I also completely missed to tell. So please note it down in your diary. I already did that. The next NSE Nifty rebalancing will be on March last Thursday and Friday. Anyway, coming back to the topic. As per this new rejig, HDFC Bank, Bajaj Finance, JSW Steel, Reliance Industries and ICICI Bank, all those 5 high weightage stock increased their weightage further in the Nifty 50 index. Whereas on the other hand, Adani Enterprise, Adani Port, L&T and TCS, those stocks weightage were reduced. In short, NSE took some money out from this low weightage stock and added into the high weightage selected stocks, which in turn to some extent supported Nifty and Bank Nifty on the positive side. I mean, for example, as per Nuvama report, only from Adani stocks alone, yesterday NSE took near $100 million out and added into the high weightage stocks. In Indian rupee, it's equivalent to 800 crore rupees. Either way, it's already done, but I want to highlight this so we can remember to be cautious on March rebalancing time. Second, yesterday in the aftermarket hours in their SEBI filing, Federal Bank mentioned that RBI has approved ICICI Bank Asset Management Company to buy 9.95% stake in Federal Bank stocks. Here, there is no mention of how ICICI Bank AMC is going to do, like whether they are going to buy the stock in the open market or they will buy as a bulk deal from some investors. Not sure. Either way, this is positive. However, if Federal Bank issued new share for money means, then it's huge negative since it will dilute the existing shareholders' share value. Just a disclaimer, I'm holding some as well. So based upon the today's price reaction, we can tell what Federal Bank management might intend to do. Let's see. Third, yesterday RBI released another big one, 182 pages financial stability report. As usual, I will attach the link in the description below. If anyone fancy, please have a look. On the contrary to Wednesday report, yesterday's report more focused on stress test, like what will happen in worst case. For example, in extreme worst case, bank's NPA might increase to 4.4% in September 2024. Similarly, they did give some warning about current account deficit data. So simply the entire report is the warning. Possibly, market might react to this as well. Finally, about institution, FII becomes mega buyers for the second consecutive day. Yesterday, the net bought for 4,360 crore rupees. Even DII, they too net buyers, but only bought for 135 crore rupees. As a summary, US market closed flat to positive and Indian ADR also indicating the same. Regarding GIFT Nifty, based on premium, it will be decided. As per yesterday evening premium, it's flat to negative. However, based on historical premium for first day, it's indicating gap up opening of 30 to 50 points. Moving on, as per stock open interest, Biocon, Indian Hotels, Adani Enterprise, Cummins, Indus Tower and Delta Corp got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Hindustan Copper, Dabur India, IEX, SAIL, BPCL and JSW Steel got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, during our market hours at 12:30 p.m., UK's housing price index is due, and in the night, lot of India-related macro like how much foreign debt as a country we got, bi-weekly banks deposit and credit growth and infrastructure growth are some of the items we need to keep an eye out today. Coming to technical, yesterday on the daily chart, Nifty formed one more green candle with fourth consecutive higher high and higher low formation. And also by combining the previous day candle, for the second consecutive day, Nifty formed the rising window pattern. Here, both of them indicating a positive undertone in the trend. However, at the same time, the candle was smaller and also in some major technical indicator wise, Nifty is about to enter an extremely overbought condition. So, there is a possibility of bearish divergence, although it is too premature to say. Hence, we might see some consolidation till or around 21,800. A decisive move above 21,800 will propel the Nifty towards 22,000 mark. The short-term support is at 21,700. Then in case of Bank Nifty, in line with Nifty, it also reached the new record high and moved above 48,500. On the daily chart, it formed a doji kind of candlestick pattern at the high, which means the market is indecisive. Hence, we can't rule out some profit booking today. However, it also forms yet another higher high and higher low formation. Overall, in the long run, the positive trend is still intact. Regarding options front, the maximum call option open interest was at 21,800 strike, followed by 22,000 with meaningful new call option writing at similar strikes in a similar sequence. So for the coming days, the options data is indicating that Nifty might climb towards the 22,000 mark. Whereas on the put side, the maximum put option open interest was at 21,500 strike, followed by 21,700 with new put option writing at 21,700 strike and then 21,800. Hence, the immediate support is at 21,700 to 21,500 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.